Is it finally time for the Australian market to start playing a bit of catch up? Hi guys, welcome to the weekly market update. Today's date is the 28th of March 2023, and before we get into it, you do need to be aware that anything I say is general advice only. It does not consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. So we start, as we probably have for the past few weeks, with the banking crisis. It's been big news now here in Europe, in the US, and it was all triggered by some of the US small to medium-sized banks having unrealized losses on their loan book. Now, all this came to a head with Silicon Valley Bank. They put a bunch of depositors' monies into things like treasuries, and as the value of those treasury prices went down, they couldn't fulfill all the customer withdrawals. So it has been a bit of a crisis. We've seen a bit of panic here. We've seen a bit of panic in the US, in Europe, and obviously it's led to some selling in stocks, but we're starting to see some of those issues be resolved. So overnight in the US, First Citizens announced they were purchasing a lot of Silicon Valley Bank. And really there was a bit of a fight over who would get it. There is going to be a facility from the US Federal Reserve which will allow banks to borrow against their treasury holdings, up to the face value of those holdings. And that does remove some of the concerns around the unrealized losses in their asset book. Also, we've seen a bit of issues in Europe, and those issues are quite different. These were very large, sluggish, unprofitable banks, and they've really been hurt by, the increase in borrowing costs, the blowout in credit spreads, and things like that. Now, after these issues with Credit Suisse, with SVB, there has been a lot of speculative and in some cases predatory short selling in some other European banks, in some other US banks, and I suspect that if we continue to see resolutions to some of these problems, we will see an unwinding of some of this shorting. And so we could see a bit of a rebound, in the banking space. So that happened a bit overnight with those US banks. First Citizens, for example, was up extremely strongly overnight. US financials are up strongly. European banks are up strongly, and our banks are up strongly today. So wouldn't be surprised to see a bit of a recovery in the banking space just as some of these issues get worked through. And that could be really good for the Australian market. We do have a lot of banks and financials. We obviously have underperformed global markets recently. And so, a couple of these banking issues being resolved could be quite good for us. The next thing to talk about is interest rates. In the US, we had the rate rise from the Federal Reserve recently. There was a bit of will they or won't they. Before the SVB collapse, everyone was saying 50 basis points. After the SVB collapse, some people were saying no rate rise at all. They went with the 25 basis points. That was pretty much expected. That was pretty much what the market wanted, and that was pretty much what they got. Now, in the accompanying statements, Jerome Powell and the other Fed members did say, do not expect a rate cut anytime soon. Do not expect a rate cut this year, for example, and expect rates to go up a fair bit further. We're not done in our fight with inflation. We're going to keep lifting rates hard. And so they remained fairly hawkish in their statements. However, if you dug a bit deeper and you looked at the dot plot, you could see that they as well are starting to lower their rate rise expectations. So in the US, the market's now expecting maybe one more rate rise, and then they'll start to cut rates from there. Here in Australia, we're going to see the RBA meet on rates next week, and largely they're expected to start pausing rate rises. So our market is expecting that we're actually going to soon see rate cuts, and that could be a real positive for the market, here and in the US and around the world, is if we do see peak interest rates in the coming months, and we start to sort of lower those interest rates, we start to see interest rate cuts. That could be really good for the market. Could see rallies on the back of it, but it will come down to if we do see an economic contraction and how severe that contraction is. Obviously, the Fed raised after fairly strong February economic data, but the reality is March's economic data could be a fair bit worse. All indications are that the data is going to start getting worse from here, and we could see a fair drop in demand, not just from the rate rises that have happened, but from all the banking and financial problems that have happened. We could see people lowering their willingness to lend, lowering their willingness to invest, and that could cause a drop in demand in and of itself. The other thing to mention this week is materials and commodities. Bit of a rebound in iron ore over the past few sessions. It had been coming off strongly, and then the last 3 sessions it's actually seemingly rebounded and it's pushed back up. We've seen copper prices push back up. Copper's back above $4 US a pound, about $4.10 last I looked. We're seeing a bit of a rebound in oil prices as well, and that's really good for our market, really good for the materials dense Australian market. The other thing that's worth mentioning is a bit of corporate activity in the lithium space. Lithium stocks, lithium prices have seen strong selling over the past 3 or 4 months, and really a lot of despondency in that space. A lot of underwhelmed, unhappy investors, but a bit of love coming back into the space today. So that is something I wanted to touch on, and we'll have a quick look at it here. There was a takeover offer for Liontown Resources from the US giant Albemarle. I believe the biggest lithium producer on earth. They made a $2.50 offer for Liontown, which was rejected by the Liontown board. Now, the Liontown board thought the offer was a bit opportunistic, coincided obviously with the recent selling in lithium prices, recent selling in lithium stocks, and they said they want at least $3 a share. The Albemarle board said, well, maybe consult with shareholders. We think $2.50 is very, very attractive, and they think that Liontown might live to regret it. We'll have to wait and see. Obviously, only time will tell. But I can see Liontown's point. It does look like lithium is at a cyclical low, and there's every chance that it could trade much higher in price in future, especially given the expected demand dynamics of the next decade. So Liontown's mine is expected to start producing, I believe, in the second quarter of 2024, and often, as you approach production, it's one of the greatest sort of value gains for a share price. So that offer basically led to a jump in all the lithium stocks today. Saw a rebound in Allchem. I think it closed about 15% higher. This is the merger of Galaxy and Orocobre. And pushed it, recovered the last sort of fortnight of selling, pushed it back up to where it was in sort of mid-February. Also saw a bit of a rebound in Pilbara Resources, PLS, today, and jumped about 10%, I believe, at the close. It does really sort of call into question some of the recent selling in these lithium stocks. Even with the weak lithium prices at the moment, Pilbara Resources, for example, trading on around 5 times forward earnings. For a producer of a material that's going to be in as much demand as lithium in the next decade, it really does look a bit odd. For me, it brings back memories of Fortescue Metals in sort of 2015, 2016, trading around $2 to $6 a share. Unreasonable sort of valuations for something that is in strong demand and is only going to become even more in demand. So that was worth something notable in the lithium space recently. But let's get back to the Australian stock market index. Really nice performance today, obviously helped by the resolution of some of those banking issues, helped by the rebound in iron ore prices, and obviously helped by the lithium movement today as well. So for our market, the X-Shows pushed above 7,000. We've pushed above the 200-day moving average. We've seemingly broken out of this consolidation range, and we've got the stochastic and other sort of oscillators starting to point higher, pointing to a bit of a rebound. If you look at our chart, really we haven't retraced any of the initial SVB selling. We're still several hundred points below where we were at the point of the SVB collapse. And it might be finally time for us to play a bit of catch up. In terms of upside targets in the short term, something like 7,100, maybe 7,200 if 7,100 breaks. And another 1% to maybe 2.5% to the upside. If we get to that level, it's then going to come down to, I believe, what global shares are doing. Next thing to look at are the US markets. This is the S&P 500. They're just in a giant pennant pattern. We can see they've got a short-term uptrend here since the lows of the SVB selling, and we've got a sort of more medium-term downtrend since their highs of January. And that just leaves us inside a pennant. They've also got a bit of resistance at 4,000, a bit of support at 3,900, and we're waiting for them to sort of really break either way and establish a new trend. Looking at this chart, we can see they've retraced all of the SVB selling. So there was the initial 3 or 4 day selling after the SVB collapse because of the SVB crises, because of the fears around the banking space. But optimism returned to their market very quickly, and that optimism was largely driven by a decrease in forward rate expectations. So, the US market's starting to forecast peak interest rates, and that's been enough for them to start grinding higher. Is it enough for our market to start playing a bit of catch up? Mentioned earlier, the next date to watch is the RBA meeting next Tuesday, and if they do pause interest rate rises from here, that could be another catalyst for us to start playing a bit of catch up. Alright guys, that's it for today. It is the 28th of March. Hopefully you've enjoyed this session. Hopefully you've enjoyed the video. If you're watching on YouTube, please like and subscribe. Leave us a comment. That would really help us out a lot. And I'll see you in the next one.